Hey everybody, I'm Justin Schlegel with RHP Real Estate and Team Schlegel. This is your May 2022 Phoenix Real Estate Report. We're going to start with some bullet points here of some items that are externally impacting our real estate market. So the first one is headlines. Remember, a headline is meant to trigger a response. It wants you to read an article, and whether that article is factual or tells the whole story is not always the case. But those headlines are often about a housing crash or a bubble bursting or lack of consumer confidence, etc. So just be careful with the headlines as they're not all accurately depicting what's really going on. Number two is the stock market. While the stock market doesn't impact everybody's decision to buy or sell real estate, it does have a heavy impact on the luxury market. And typically when we see the stock market slide a little bit, that will reduce confidence and some people will kind of take a wait and see approach. So we are seeing the stock market, the financial markets, the crypto markets, things like that having a little bit of a rough ride lately. So that's something that is playing a role. Interest rates. We've beat the dead horse. He's already gone. But we know that interest rates have risen a bit over the past couple of months. And so that is definitely an impacting factor as well. Inflation. That's another horse already gone. We're not going to touch that. But gas prices, energy, food costs, insurance, utilities, etc., everything's getting more expensive to live. And so that impacts a household's bottom line and their ability to potentially upgrade where they live. The end of May. So something that not everybody will think about, but something that from experience we have seen over time is that the last couple of weeks of May typically are a little bit slower in the market anyways. Number one, last week we had lots of promotions and graduations and everybody kind of focused on the school year ending. And then this week it's school is out, kids are home, people are adjusting to the summer routine. And then Memorial Day weekend is kind of the kickoff to summer. So a lot of people are traveling or going camping or things of that nature. So the end of May can be a little bit softer anyways. So everything's just kind of compounding together. And then finally, we're about 6 months out from the midterm elections. So political cycles definitely can play a role in real estate, definitely can make somebody feel good or not so good about the direction of the economy and the country as a whole, et cetera. And so that can cause them to either sell now or not sell now, et cetera. So let's get rid of these bullet points and let's talk about some actual numbers in the market. So inventory is starting to rise a little bit. Active single-family homes across the valley right now are about 5,779. If you add in the condos and townhomes and those types of properties, then we're looking a little over 7,000, about 7,049. So those numbers have risen over the past couple of months as well, which is a good thing for buyers. You throw on top of that about 855 coming soon properties. So you have close to 8,000 active or coming soon properties for buyers to choose from in the valley. So when you look at the pending and under contracts, you're about 9,176, which makes about 53.7% of the overall market. So that number is definitely dropping when it comes to more available, less under contract in that percentage. So that's a good thing for buyers. That's a good thing for the long-term health of the market because the pace that we've been at the last couple of years just isn't sustainable forever. So when we break down the active inventory into some segments, we look at over $1 million is about 20% of the active inventory versus the under contracts are only about 12.5% over $1 million. Under 500,000, we have 30% of the active inventory and we have 43.5% that are under contract. And then the 500 to $1 million, which is where most of the sales seem to be happening, you have 50% of the active inventory and 44% of the under contract. So that's kind of the sweet spot. That's the real people, typically not so many of the investors, but somebody that's trying to upgrade, et cetera. So one thing to watch going forward is how builders with new construction process. We've seen lotteries and drawings and all these competitive situations for a while. But if the market continues to transition as we believe it's going to, then I think that the new construction arena is going to open up a little bit and get a little easier to make a home happen there. So our expectations are that we're going to kind of flatten out a bit when it comes to prices, at least for the next couple of months, and then see what happens. So I think there's a feeling out period and people got to kind of get used to new interest rates and just everything that's going on around us. So lots to talk about when it comes to real estate and outside that impacts real estate. So if you have any questions about the market, that's what we're here for. Information is below. Thank you for watching. Have a great day. Have a safe summer, and let's talk soon.